For decades, Swiss banks have been regarded as one of the safest destinations for safeguarding wealth among the world's richest individuals, business leaders, and influential figures. Strong client confidentiality protections, advanced security measures, and Switzerland's political and economic stability have helped establish the country as a global financial hub. The foundation of Swiss banking secrecy was laid with the Swiss Banking Act of 1934, which imposed strict restrictions on the disclosure of client information. As a result, details regarding individuals' or institutions' deposits and assets have traditionally remained confidential. Switzerland's long-standing political neutrality, robust economy, and sophisticated financial infrastructure have further enhanced its appeal among investors and high-net-worth individuals. These factors have made Swiss banks a preferred choice for those seeking a secure environment for their wealth. Michel de Roquefeuille, a former head of the Association of Swiss Private Bankers, once compared banking confidentiality to the professional secrecy maintained by doctors and lawyers. He argued that protecting client information is both a professional obligation and a legal requirement, and that unauthorized disclosure constitutes a violation of the law. Today, more than 300 banks and financial institutions operate in Switzerland. Among the most internationally recognized names are UBS and Credit Suisse, both of which have played prominent roles in global banking. Despite their reputation for secrecy, one of the most common misconceptions about Swiss banks is that individuals can open completely anonymous accounts. In reality, this is no longer possible. Current regulations require banks to verify customers' identities, establish the source of their funds, and comply with strict Know Your Customer, KYC, and anti-money laundering requirements. According to the Swiss Bankers Association, some accounts may be managed using numbered account systems, but designated bank officials are always aware of the client's true identity. As such, the notion of a completely anonymous Swiss bank account is largely a myth. Over the past few decades, Switzerland's banking secrecy laws have undergone significant changes. Facing international pressure over concerns related to tax evasion, money laundering, and hidden offshore assets, Switzerland has adopted measures that allow information sharing with foreign authorities under specific circumstances. On several occasions, reports have emerged linking Swiss bank accounts to politicians, business figures, and other influential individuals accused of corruption in various countries. These revelations have intensified global efforts to combat illicit financial flows and increased calls for greater transparency within the Swiss banking sector. The history of Swiss banking secrecy is also deeply rooted in Europe's political landscape. Historians note that the disclosure of financial information involving several French politicians and businessmen was among the factors that contributed to the enactment of the 1934 Banking Act. The popularity of Swiss banks grew rapidly in the years leading up to World War II and during the rise of Nazi Germany, as investors sought a secure location to protect their assets. Over time, Switzerland strengthened its position as one of the world's leading international banking centers. Today, the appeal of Swiss banks extends beyond confidentiality alone. Their reputation for secure wealth management, economic stability, and access to global investment opportunities continues to attract wealthy clients from around the world, reinforcing Switzerland's status as a premier destination for international finance.